365, shake my hand. Right, guys, I promised you I was going to do this video. I'm a bit pressed of time, but I'm very happy to kind of like give you guys a quick rundown of what Jerome Powell said yesterday in last night's FOMC meeting, right? It's been I've been waiting for this, right? You know, whenever the Fed chair addresses well, I guess America and the world, really, I pay attention, right? Because we want to know what the big banks are doing so we can do the same thing in our accounts, because we don't own the markets. And yesterday, Powell was clear. He gave exact dates. He finally gave some of us who've been tracking the fundamental analysis behind his order flows and trying to see how the year is going to end and trying to predict how price will be next year, so we can start aligning short-term trades, long-term trades, medium-term trades in that trade. And I just want to talk about 5 to 6 important things that really summarize, generally speaking, what he said yesterday, and key dates and key market movements for you to look at. And then at some point in time, I'm going to quickly show you the charts, right? There are a couple of things we can talk about on the dollar index chart, right? Which I think will be fundamentally quite interesting. I really think this will be fundamentally quite interesting, right? So let's go. Yesterday, he did say obviously that they are not raising rates. Last night. So the last night was not the FOMC meeting where rates were going to go up. That's fine. But you would have seen crypto rally a bit and then pull back after he said other things. So crypto first jumped on that and then pulled back. The big thing that he said, the thing that we want to take note of, the thing that we've been waiting for and tracking, is that tapering is actually going to happen, right? He literally said tapering is happening on the 4th of November. That is specific. That is a D-date that is going to move the markets. Institutions are preparing for orders for that particular day. There are conditions that need to be met right before tapering. There are 2 specific reports that need to happen before that tapering. But you can't come and say, how did we know? Oh, fundamental analysis, you have to wait on the day. This is it, right? Knowing this now means you can start to predict and floor plan money. You need to track your money now. You need to locate your supplies and demands. You need to find out, where does your dollar index stand right now, your DXY chart, right? In relation to the markets, where are all the USD pairs going to be? Where are they going to be after NFP? The 8th of October, I'll talk about that. Where will all those levels be on the 13th of October after CPI, Consumer Price Index? I'm going to talk about that right now in this short video, right? Because those are the 2 big reports that he's waiting for, right? Powell is happy. He said tapering is going to happen on the 4th of November. And then he said, look, it's going to be a quicker one. Normally tapering takes about a year, right? He's thinking we're going to do this in 6 to 7 months. So by the middle of next year, June, July, so 2 financial quarters, right? A little bit of this financial quarter, the last 4th quarter of 2021, and 2 full financial quarters of next year. Banks think in 3 months, take profit in 1 year, 10-year plan. Those 2 big financial quarters by next year, he thinks tapering will be done. So in total, it's about a 7-month taper, all right, which is quite quick. Very quick, which signals that the Fed is worried about inflation. It signals that they definitely think there is an inflation problem. It doesn't answer the question whether inflation is transitory or here to stay or whatever, but it signals that they're taking it seriously, which is what we've been waiting for, it's what we've been asking for. Now, with that happening, with the taper happening on the 4th of November, due to last for the 7 months, that was extremely hawkish. I mean, if you go down to your dollar index chart, which we'll do at some point in this video, you will see for yourself, yesterday was a big green day. Don't fall for the traps. You can have a big green day because of a big news event, but structure is still in charge, right? There's still last week's order blocks, last week's order flows, right? If price is leaving a supply, it's gotta go to a demand. Unless if they create an original turn, if they create a new demand, essentially, right? So we'll look at what the charts are showing us, right? But that was very hawkish, from Fed, signaling inflation risk, right? Therefore, time to temper. Now, this was a unanimous vote from the FOMC, so there's going to be no in-house fighting. So it's kind of like a dead set guarantee. Here are the conditions that you need to be aware of. The first one is the jobs report, NFP, which is normally on the first Friday of every month. The difference is this October, the first Friday is on the 1st of October, right? So because of that, NFP will be on the 2nd Friday. It's going to be on the 8th of October. The 2nd Friday of October is going to be an NFP report. This one is big, and this one matters, right? If the NFP report or the jobs report on the 8th of October is terrible, if it's a shocker, if Delta is still dominating and jobs are not being created, that might slow down tapering on the 4th. But if we get a positive NFP, a clean jobs, and as usual, if you subscribe to our channel, I will update you just before NFP comes out. So far, I have not gotten my NFP speculations wrong in terms of job creation, in terms of the reaction to the markets, dollar positive, dollar negative. Just follow us, just really backtrack on that stuff, right? I use ADP and I also follow the weekly job claim reports, right? So we'll be looking closely at those as we get closer and closer, to the 8th of October. But if the NFP is a shocker, if it's terrible, then sure. Jerome Powell on the 4th of November might change things. But if it's a strong NFP, that will allow him to rubber stamp the taper on the 4th of November. The next big report that he's waiting for after NFP is on the 13th of October, which is normally like a couple of days. So if NFP is on Friday, CPI will be on Tuesday or Wednesday, something like that. That is consumer price index. If the figures they are strong as well, if the figures they are good as well, then again, clean indication for a rubber stamp, easy, tapering on the 4th of November. And these are the two main reports, because there's really nothing after that up until the next FOMC meeting on the 4th of November, where we expect them to announce tapering is starting tonight, etc., etc. So that's quite interesting. The press conference happened. A lot of the questions were about different things that are really not suited for the channel, but a lot of quite key economic indicators, what they were worried about, what they were not worried about, statistics, figures, particular job sectors. The last two things that I think I should just pull up is there was a reporter, if you watched the live, who she asked a brilliant question. She was like, look, man, you're worried about inflation, right? There's an inflation risk. You're worried about all these things. You seem to be very hawkish. So then are you going to raise the interest rate? There are going to be interest rate news headlines very soon. You're going to see them. She asks, are you going to raise the interest rates? She's asking the Reserve Bank governor, essentially, right? That's what the Fed is there. Are you going to raise the interest rates during the period where you're tapering? Because she wants to know, should we expect 2 interest rate hikes next year? Is the FOMC backtracking on what he said, I think in June, July, right? You remember on the 16th of June, or the 16th of July, 16th of June, there was an FOMC meeting where they said, look, there's going to be interest hikes, right? And they're going the interest rate hikes are going to happen earlier than expected. So she's asking, look, is that going to happen during your tapering? Right? Because that has big implications. And I don't think Powell, I don't know, I could be reading this wrong, I don't think he planned for that question, but he quickly, managed to control the situation, and his answer was, and I quote, you can't raise rates and temper at the same time, it will be contradictory. So we got to clear. We now know how the US interest rates hikes are going to go, right? So we literally know, if we get taper on the 4th, it's like, look, that'll be very contradictory, right? The market signal for now then, a very clear market signal is there'll be no interest rates up until or after June, July 2022. Okay? So, because you guys trade all these news events. Well, here are the answers. If you sit down and actually listen to what the governor is saying, he'll give you all the answers. The last thing I want to talk about, because I've got a class in the next 4 minutes. He said crypto. He spoke about crypto a little bit, and I don't want to jump the gun. He was talking about crypto, but really referring to stable coins, right? But he spoke about how crypto was a currency-like product. That's important. If the Fed believes crypto is a currency-like product versus a financial securities, you see, you don't want him to say crypto is like a security, because a security then puts us back in the center of SEC, puts in right in the center of overregulation, puts us back in the center of tax debates and tax talks, right? So he wasn't fully endorsing it, but he didn't kick it to the curb. That's very good. Number 2, he called it a currency-like product, which is really what we want. That's what we want. And then he managed to steer that conversation away to crypto and started to talk about the fact that all these changes are actually quite important. The central bank themselves is looking at an implementation of digital currencies, right? Which at some point I should cover that topic, was quite a big thing. And they're looking for some type of instant settlement system being released. An instant settlement system is basically a mirror version of what cryptocurrency markets are doing. No more delays, just like with crypto. I can send you Bitcoin wherever you are in the world right now. You'll get it right now, all right? So they're playing around with these ideas and these models, right? So an instant settlement system has been released, but he said, look, he needs Congress and the president to basically support digital currencies, right? So we'll see what that old man Biden says about this, because he's got that crazy, old lady, in charge of a lot of this kind of stuff, and so anything goes. But that's positive for me for crypto. I've been on top of this stuff on our public Telegram group. I did say we're most likely gonna get a strong dollar, and a lot of people are thinking buy now. No. Structure. Supply and demand governs. You buy the structure, sure, but now we understand the intrinsic value behind the dollar. It's hawkish. So the next few demands that the dollar is going to arrive at, those are going to be make or break. The job numbers coming very soon are going to be make or break. CPI, make or break. We are not here to get instantaneous, shortly, poorly thought out trades. We can literally map our trading idea now for the next 2 to 3 weeks. All right, gotta go find those levels this coming weekend. So I hope you join me live on Sunday, this coming Sunday. I don't know what the date is on Sunday. I can quickly check for you. This coming Sunday on the 26th of September at 4:30 p.m. South African time. I'll be doing live on this channel, going through a lot of pairs. Right, we call that our traders war room. Right, so I think I can end this video here. Unless if you guys want me to just walk you through the dollar index chart, maybe we can do that. Right, you can see already that the emotional sellers have been dealt with. Buyers, sorry, or the ones who rushed yesterday, into buying the FOMC meeting. Obviously, if they've taken profits, good for them. But for the most part today, price just continued on its merry way. Right, honoring the fact that markets had already arrived at a supply before the news event. Right, so when I show you this chart, and let me just switch cameras real quick. Let's switch cameras, and then let me share my screen with you so you guys can actually see what I'm talking about. There we go, dollar index, right? So this is a situation, right, that the FOMC left us, and I'm recording this video in parts because I had a class now, and it's a good class because one of our 365 students, David, just confirmed he's doubled their account. It's just always great news. I mean, he did the course, says it's been a month, I think, into trading. He's already doubled his first account, which is awesome. I mean, yeah, man, I'm super happy, right? So we got the dollar index. There we go, got the dollar index, right? So let's talk about this, man. We got time. I promise I'm going to be a long video, but let's talk about this, right? Because we don't want to pretend like something is random in the markets when it's not, right? This is literally the setup that was given to us, and depending on which side you're on the markets right now, we spoke about this area of value on Sunday in our previous war room. This coming Sunday, like I said, I will be doing another war room, so check that out live on our YouTube channel. Right, so we've got this ding here. I've marked it in red because I don't like it, but it is a supply, and it's a supply under a supply, sell pressure type of situation. FOMC was yesterday, the 22nd of September. All right, 22nd of September was Wednesday. And so this is how we started the week. On the 20th of September, on Monday, markets hit a supply. We spoke about this on the public Telegram group. I shared an H4 time frame of DXY and USD CAD, and I said, let's sell, right? We made tons of money there. I'm very good in the public Telegram, where I'm trying to be anyways, of just continuously updating people, exit, enter, whatever. Oh, look, we sold. Why? Because price was leaving a supply. Now watch these guys. FOMC comes in yesterday. Price has already left a supply, really dropped, right? Okay, there's a bit of rejection, is pumping back up. FOMC shows up at 8 p.m. What time frame are we on? We're on the daily time frame. Let's go to an H4 time frame just to really see what's going on, right? So this is very important. So this is on the 21st of September, so not yesterday. This is on Tuesday. On Tuesday, on the H4 time frame, an hour before the New York markets open, right? Markets did this. All right, easy. Okay, and you have seen our USD CAS retrace, and we know when there's a retracement, if you know how to calculate retracement using the Fibonacci, you just wait for it. You carefully wait for this to be done. Retracement here. I can quickly go to USD CAD. If there was time, I would. But the point is, when the dollar index spiked up, USD CAD went against our sell position for a little bit, and then continued to drop down again. But what's going on here? They're creating specific market conditions, and they're also testing retail trader, resilience, right? So price does that, and then whoa, too quick, because we really have to break this stuff down. Way too quick. So this Tuesday, and I'm just sorry, I'm going to take this nice and slow, right? So price gives us a bullish engulfing pattern, which is a signal for reversal, right? If you follow any type of technical analysis textbook, this is a signal for reversal. All right, we holding cells up there, right, as far as I know. And then at some point I make the announcement that, look, FOMC is about to happen. Let's just see, that's 22nd of September. This is 9 a.m. London session. I posted a couple of things in the group. We take profits. Like, guys, it's 5 o'clock now. It's time to close these sales, because anything can go with the FOMC. I break down the tones, hawkish, dovish, tempering, all the things to look out for that I've just explained to you guys in this particular video. This is how I'm just showing you what the markets were doing, right? I've explained it, but now you need to see what the markets were doing. Then FOMC is going to show up now at 8 p.m. So the next big candlestick should be the FOMC candlestick. Too fast, you got to see it. 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 You have, remember, I've broken down everything that he was saying. So the first thing that this candlestick does, the very, very first thing, right? I'm going to slow this down. Look at this. The very first thing is markets make contact with the supply, right? But at the same time, break the demand. Make contact with our supply. So if you didn't come out of those USD sales, the DXY sales, we didn't take profits, like I said, markets quickly wiped out your profits, right? Literally to a point of where we entered, right? Making sure to take everything. Number one. Number two, because it's a supply, very valid supply. Look at that. From a daily time frame perspective, that's all that happened. From a daily time frame perspective, this order block is intact. From a daily time frame perspective, yeah, sure, it makes sense. From an H4 perspective, we're not even close to the true supply, because price could actually go a little bit higher. All right, I can tell you that right now. If price wanted just to still sell, it could have gone a little bit higher. But what have they definitely done? They've definitely removed the demand that they created here on Tuesday, right? 24 hours before FOMC, and created a much more lower push. Why? Because again, as we spoke on Sunday in the war room, there's a supply there, there's a demand there, right? Markets can play around if they want, but eventually price has to move in a specific direction. So then this is FOMC, the duration of the speech, and up until basically end of day, last night, midnight. And then what happened today in the morning? Well, after all the hype was done, this for me was an emotional buy. Absolutely. FOMC was definitely I'm hawkish. I completely agree that we're gonna start to see some dollar strength, right? I feel like the move is gonna be more towards NFP, CPI, and tempering, right? But also it would be nice if price could first go and pilot itself up from a valid demand. So this is what happens today in the morning during the Asian markets. In the AMs, 2 a.m., 1 a.m., markets have made contact with the supply, right? Nothing is going to change. The rules of the game are not going to change. If the supply has been made contact, their sell orders in the supply need to get filled. And this is where price is right now, today. All right, so this is what we're starting to see now. Now, what do we have here? Here we have a support. All these emotional buys that took place yesterday have definitely created some type of support, some type of buyer. I don't know if it's going to climb all the way up. Let's see. Yeah, it'll be difficult. I find it very difficult to imagine that this thing is going to climb all the way up. If it does even continue climbing, it might stop here, it might stop there, right? It'll be very, this is a lot, right? But anyways, and the New York session is about to come to an end right now, right? So you're not going to get the most active players in the market space right now, right? But anything is possible, I guess. But my take is on the safer side, because right now I'm actually in a very risky trade, and I told everyone not to take it. I was just taking it for completion, right? I already sold, and price did arrive at a 1 hour demand on USD CAD, so I wanted to take it. But price could turn here, right? This could be a little cute push to the upside just for price to drop down, right? And then from here, we might be we can start talking about, you know, very substantial move to the upside potentially, right? This looks like a very strong place to buy. If you notice also during the week, we spoke about USD JPY. It was a short for us. I think it did like about a 33 to 40 pips good run. And then after that, price broke only to make a lower demand and rally, right? Look at that, right? B class trade here. Right. So, and I literally typed that out in the Telegram group, that for those of you who are very tight, make sure you are aware of this. But for the rest of you, include a bigger area of value. Literally, all those instructions were given to include all of this. But nonetheless, there was a 20-something pip run, that a 30-something pip run. I apologize. Let me just clear this up for you so you can see it carefully. It was a good trade for me. It was a good short-term trade, but I've been talking about you know, monetary policy divergence on USD JPY, that the dollar is hawkish, and JPY, generally speaking, should see some weakness soon enough, right? So we're 36 pips, very good, and then price turned. I unfortunately did not catch this real drop here. I mean, after I told people to close, I didn't come back to really look at markets, but prices then created a bullish engulfing pattern on the daily pattern. It's gone, right? Markets are gone. It'll be nice if they to come back to retest, but if they don't come back, we understand why, right? This has happened. In fact, it's a strong PCP has been broken. I don't trust it, so I would wait here. Personally, I would wait somewhere here and then see what happens, and that should be perfectly in line with a potential retest of this pattern. But we'll see. But look, guys, long story short, that's really what's going on with the FOMC. You can see this pair is running, like literally running. It's unfortunate that we got out a little bit early, and that's fundamentally because I don't think our stops were positioned correctly. So for me, it was just better to tell everyone to close versus a holding. But with a better order block to have targeted in hindsight, right? It's not what happened for us, but in hindsight, we should have held down this Talitha area as the low, because remember on Monday, Tuesday, when I gave out the signal, this is where price was, or where price was approaching. So the only thing that had happened at the time was markets had really entered down. I was trying to keep areas of value as narrow as possible for people with small accounts, but again, going with daily order blocks will always win, right? You can never beat daily order blocks. So this was supposedly the better area of value to hold. I mean, it was not a losing trade, but nonetheless, we could have gotten more, right? And I don't want to sound greedy, but I'm simply saying this was a very good run, 30 pip risk, and to date, price has just given us quite a lot back. All right, already in 48 hours, right? In 48 hours, markets have just ran up, right? So 30 pip risk, and so far almost 1:3, almost 90 pips, right? So it's not bad, and this was to be expected, you know, because again, nothing in the markets is random. You can always have enough foresight to kind of like tell the fundamental tone. You can, because it's based on the structure, you're going to have to find where the money is, right, guys? 365, thank you for watching this video. Please continue to like, share, subscribe, talk to me down in the comment section. Let me know what else you'd like to know, but I really wanted to get this video out to you guys so that we are all on the same page. 8th of October, 13th of October, 4th of November, key market days. The swing trades are about to start, right? So join me this Sunday for another live session of a war room as we map this stuff out. Let's see how the markets close tomorrow. But yeah, 365 guys, I appreciate all of you. Shake my hand. Cheers.